Pete McGuire from BAXTER FX with us to cover crude first off and then some other talking points of interest. Pete, welcome to you. Really interesting, the price action overnight, because you've been on many times just kind of flagging the geopolitics in the mix, let alone Mother Nature. Where are we at now with Iran?
Well, good morning, Brooke, and good morning, Carson. There's talk now that they're firing missiles in that whole region. You know, the sanctions are really starting to bite Iran, and they came into really effect on the 1st of July, which was Sunday just gone. Production numbers, they'll lose around about 400,000 barrels per day, in addition to around about 600,000 to 800,000 barrels a day. And the slack has been taken up by Saudi Arabia, who are now at 30-year highs as far as production. They're pumping over 10 million barrels a day of crude. So we're worried about that Strait of Hormuz, of course, because of a distribution point. And if they do ratchet it up, the US are moving fleets into that region to make sure that the tankers don't have any issues. So it's going to be a very interesting July and August, and we more or less, you know, pitch that somewhere out in about March or April, and it's all coming home to play.
Because, I mean, 4.5% is a big move. Then again, commodities were higher overnight, but it was the 9% move on Friday, which really stunned everyone.
Well, it's up around about 10 or probably 11%, Brooke, in about 5 trading sessions, crude. So it's very, very strong. You've seen.
And you think most of that's on geopolitical?
Oh, I think it was probably
risks?
Oversold, and then it just, and certainly when you do get these tensions, and you've got supply, you've got coupled, of course, with what's happened with Europe. There was a little bit of a feel-good factor, but that just ratcheted things up, and I think it's just going to probably cause a little bit more angst for the whole market. Let's just see what Iran does, but certainly the sanctions are taking effect over there.
Let's just understand a response to all of this. Do we get Obama and others tapping strategic reserves, aware of the whole kind of finely balanced growth story right now, if you can call it growth? Just
I was going to say, aware of the presidential election.
This is right, but you've seen, of course, other presidents go into an election on the back of high oil prices and come out the other end. It's not game over.
Oh, far from it.
But, you know, given that it's all so delicately balanced, could that be a consideration now to trigger those strategic reserves, or the Saudis just keep on pumping and do the US's bidding?
Yeah, well, let's just see what happens. First off, I think the Saudis will keep on pumping at 10. They probably can ratchet up a little bit further if they need to. Iran really hasn't done much. It's just, you know, testing the water, so to speak. So let's see what happens over the next week or 2 or 3 weeks. And if they really play hardball, then that's going to have an impact as far as the states, and that all leads to, you know, those whole tensions escalating. There's been no word yet as far as Israel, so let's just see what happens.
US consumers, before we move on, it might be worth pondering this one as well. Are they, in their own usage, looking at this with concern, or in fairness, with issues with things like LNG and the rise of that to maybe supplant, you know, pure and simple, that energy price where it's heading next? Is this not really as big an issue as it might have been, say, 10 years ago?
It's always an issue as far as the Middle East. And look, remembering 10 years ago, you had crude prices after a very, very slow 90s as far as growth. We had oil prices at one stage during the 90s. I think they averaged about 12 or 15 bucks a barrel. So don't worry, the Middle East and the OPEC producers and all of the producers have done very well in this hypercycle. The next side of the whole equation is it's very much a wait and see, because if things escalate, then that may be the card that Iran tries to pull, and it's a very delicate situation at the moment.
Because we haven't even talked about Arab Spring, but of course the Saudis would be acutely aware that whoever's side that they opt to go for it at the moment, it's clearly the West all the way.
It's been the West for 20, 30 years, 40 years.
What do their own people say in response to that? Because it's almost as if you're thumbing your nose at Iran, which they are, but also there's deep-seated desire for reform in Iran.
Well, yeah, but when you look at Saudi Arabia, certainly you've got problems in Iran as far as, you know, an Arab Spring. But when you look at Saudi Arabia, you've got high unemployment numbers there as well. And you've got and this is a great challenge for all of the Middle East, they've got high numbers as far as under 25 or under 30 years of age, their population base. And Saudi Arabia, I think it's over 50% is under 30 years of age. So it could be a changing of the guard, but they've got a very heavy hand as far as how they manage that whole economy. And of course, with Sharia law, and really, it's a prince, or it's a kingdom in itself. So they are the absolute ruler there, where it's a little bit more fractured when you look at Iran from I suppose, the social standpoint.
What about the Chinese demand picture in all of that? That hasn't even been mentioned, but 1+ billion people.
Yeah.
I mean, we talk all the time about the slowdown. How's it factor into this discussion?
Well, first off, we'll just answer Europe for a second, Brooke, as far as where they're looking as far for GDP numbers around about -0.5 to -0.5 to -0.3% growth for 2012. So it's very slow in Europe.
And this is the biggest export market for China, of course.
Exactly.
Yep.
And then the next part of it is, when you think of China, their index is the Shanghai Composite Index. It's up 50% since 2000, which is absolutely woeful. But people don't understand that you've seen the GDP number quintuple in that time. We've seen compounded growth of 8 to 9% for the best part of 11 or 12 years, yet its stock market hasn't performed. And the retail investor in China has very much been along the gold-centric, and of course property and fixed income.